Most successful investors don't feel reckless. They feel responsible. They saved, diversified, followed professional advice, built what they were told was a balanced plan. And yet, something doesn't feel secure, because the financial world changed, but most portfolios are still built for a different era. The safe side of the portfolio doesn't always act safe. Taxes quietly reduce what compounds. Inflation raises the cost of living faster than plans adjust. And diversification often means everything is tied to the same system. But beyond the traditional stock and bond world, there's an entirely different side of investing most people never see. Assets that generate income from use, not market speculation. Investments structured for tax efficiency. Capital positioned outside the daily swings of Wall Street. Not alternatives because they're exotic, but because they operate differently. And experienced investors are starting to ask a different question. Not, how do I beat the market? But should all of my wealth be dependent on it? In this documentary, you'll see why the traditional 60-40 model is being re-examined, how taxes silently erode long-term wealth, why rising lifestyle costs create hidden pressure, what market storms expose about portfolio design, and how some investors are repositioning capital into private, income-producing, and tax-aware investments. This isn't about chasing higher returns. It's about expanding the field of view. Because the biggest financial risk today is assuming your current strategy is probably fine.
Across the country, millions still rely on a retirement formula created for a completely different era. The famous 60-40 portfolio. For decades, most people were taught that mixing 60% stocks with 40% bonds created balance, safety, and predictability. But in today's financial environment, that old idea is being challenged. Market swings, inflation pressure, and shifting bond behavior have exposed weaknesses that weren't obvious before. If someone followed the traditional path, that person may have already seen that the so-called safe half of the portfolio doesn't always act safe. And now, many Americans are asking a new question. What if the foundation wasn't as secure as everyone assumed? New approaches are emerging. Strategies designed to handle tax pressure, income uncertainty, and market volatility in ways the traditional model never accounted for. If you're an accredited investor staring down a massive tax bill from capital gains, you already know the frustration. You build wealth, you take risk, and somehow you're punished for it every April. Right now, the clock is ticking. 2025 and 2026 could be two of the most expensive tax years in decades, as expiring provisions and rising rates collide. But for a limited time, there's still a window to act.
Tax cuts are set to expire in 2026. Capital gains up to 28% are being proposed, and the wealthiest citizens face a rising tax burden.
Most investors don't realize it, but every dollar you pay in unnecessary taxes is a dollar that never compounds again. The problem isn't just the rate, it's the erosion of time. The wealthy don't beat the system, they align with it. They find ways to defer, reduce, and redirect taxable gains into vehicles that keep working for them. There are proven strategies that let you defer or even eliminate taxes on appreciated assets legally by reinvesting in projects that stimulate growth, housing, or energy. It's not about loopholes. It's about understanding how the tax code rewards productive capital.
High net worth investors don't just seek returns, they seek efficiency. Every dollar sheltered from immediate taxation is a dollar that compounds faster.
I thought taxes were just a cost of doing business. But after we met with our advisor, we walked through all our options.
We were able to redirect almost 7 figures into a tax-advantaged reinvestment, and it's still growing today.
When you reposition your gains with purpose, you stop reacting to the IRS and start playing offense. You transform confusion into control.
When clients see how timing and reinvestment can change their entire tax outlook, the relief is instant.
This is how true wealth is built, through structure, strategy, and confidence in every market cycle.
If this is making you question how your own portfolio is positioned, you can book a private strategy call with me at wealthvids.com/altsadvisors. We'll look at your current structure and see whether alternative, income-focused strategies may make sense. All right, let's continue. When the radar lights up with a hurricane warning, it's already too late to start preparing. The same is true with your money. Market volatility and rising taxes are storms we can all see forming. Yet most investors still wait, hoping the worst will pass them by. The investors who come through safely aren't lucky. They're prepared. Every storm separates two kinds of people: those who react in fear and those who already built their shelter.
When the market dropped, our friends panicked. But our income never skipped a beat. It was steady every quarter.
Because when you build your plan on stability, not speculation, volatility just becomes background noise. Many investors believe they're diversified until everything moves the same way. Stocks, bonds, mutual funds, all connected to the same grid. When the power fails on Wall Street, everything goes dark at once.
We thought our portfolio was balanced, but when rates changed, everything fell together. That's when we knew we needed a better plan.
The smartest investors think like preppers. They create backup systems, cash-flowing assets that stay on when the financial grid goes down. Private credit, real assets, tax-advantaged income designed to perform in any weather.
It's like having a generator for your retirement. Even when markets shut down, our income kept coming in.
Storms are inevitable, but chaos is optional. True financial freedom isn't about timing the market. It's about designing your life so you can stay calm, protected, and in control, no matter what happens outside.
On paper, you're winning. Your balance sheet says you're ahead. Your advisors say you're diversified. Your peers assume you're set. And yet, there's a question you don't say out loud. Why does this still feel fragile? Because inflation doesn't attack your net worth. It attacks your life. Private education, healthcare, staffing, travel, prime real estate in the places you actually want to live. These costs don't rise at 3%. They rise at 7, 9, sometimes 12% a year. And while markets move up and down, your lifestyle only moves one direction: up.
I wasn't worried about running out of money. I was worried about waking up one day and realizing my money couldn't buy the life I built.
You were told diversification would protect you. Stocks for growth, bonds for safety, cash for certainty. But inflation changes the rules. Stocks and bonds fall together. Cash bleeds quietly. And inflation-linked income gets taxed on the way in. So while everything looks conservative, you're quietly losing ground.
Most high net worth investors aren't underperforming markets. They're underperforming their personal cost of living, Chayef, and almost no one measures that.
And at some point, a different question emerges. Not how much is my portfolio worth, but what does my wealth actually earn? Because net worth is theoretical. Income is real. I've been measuring my wealth by what I could sell it for, instead of what it earns for me.
When that clicked, I realized my plan was to survive by selling pieces of myself. That didn't feel like wealth anymore.
There is another model, used by endowments, institutions, families that don't hope their wealth lasts. They design it to. They don't rent shares. They don't lend money for safety. They own assets that produce income, the infrastructure people pay to use no matter the headlines. What if you stopped checking the market every morning? What if volatility no longer dictated your mood? What if your lifestyle was covered before touching principal? What if your wealth felt boring because it was predictable?
I don't watch the market anymore. I watch the deposits. That changed how I sleep.
The biggest risk isn't volatility. It's assuming your current strategy is probably fine. Inflation doesn't announce when it wins.
Most investors don't realize how limited their options really are. Traditional markets, stocks, bonds, mutual funds, get all the attention. But what if the strategies used by the ultra-wealthy were available to you too? Strategies focused on stability, predictable income, tax advantages, and growth that isn't tied to the mood of the market. For over 30 years, I've helped everyday investors expand beyond those limitations. Today, I'm going to give you a look at something most people never see, the alternative investment matrix, and the simple tool that identifies which category might fit your goals. If your portfolio feels like it moves up and down with every headline, if you're frustrated with low yields, or if taxes are eating away your progress, you're not imagining it. Most investors are stuck in vehicles that don't protect them from volatility, inflation, or tax drag.
I felt like everything depended on the market. Every dip made my stomach drop. I wanted something steadier, something that didn't feel like a gamble.
Alternative investments aren't mysteries, they're categories, each built to solve a specific problem. But the key isn't knowing all of them. The key is knowing which one should you consider first. To make this simple, we created the priority assessment tool. Simply arrange the categories you see on the screen in order of importance, and in less than 2 minutes, you'll have an answer. The tool reveals the category that matches your goals, timeline, and risk preferences. You'll also get 3 alternatives inside that category that are worth exploring, and a short documentary that explains them clearly.
We felt overwhelmed. There were too many options.
Yes,
the assessment made everything make sense. It showed us where to start and, more importantly, what to ignore.
Once you know your category, you simply watch the short documentary that will explain the benefits of the selected alternative. It will walk you through the advantages, the risks, the timelines, and what each alternative is designed to solve. Avoiding market volatility, generating predictable income, creating tax-free or tax-efficient growth, building long-term appreciation, reducing concentration in public markets. Imagine keeping more of what you make because your strategy works with the tax code, not against it. That's the power of the right alternative investment category. But it all starts with the assessment. So here's what to do next. Click below and take the alternative investment assessment tool. Book a call so we can walk through your results and create your personal proposal before access to these opportunities closes. The right opportunities don't stay open forever. Start the assessment. Watch your category. Then let's take the next step together.